students. In present video, I am going to explain about second problem from bills of exchange topic. I am making this video for degree students. I am taking this question from Kalyani Publications. Authors Jain and Naran. First video link is available in the description box. Let us see the question first. Bill of exchange for 600 rupees is drawn by Messrs. Bhogi Lal and Company on C. Narayan Das and accepted by the latter, payable at Canara Bank of India. Show the journal entries in the books of account of Messrs. Bhogi Lal and Company under each of the following circumstances. A. If they retained the bill till the due date and realized it on maturity. B. If they got it discounted with their bankers for 580 rupees. C. If they endorsed it to their creditor, Messrs. Cox and Company, in full settlement of their dues of 650 rupees. D. If they sent the bill to bank for collection. This is the question. Let us see the solution for this. A bill of exchange for 600 rupees is drawn by Messrs. Bhogi Lal and Company on C. Narayan Das and accepted by the latter, payable at Canara Bank of India. First of all, for this transaction, we should write the journal entry. Bhogi Lal prepared a bills of exchange worth 600 rupees on Narayan Das. So, and received acceptance from him. Here, a person who prepares the bill is known as drawer. A person on whom this bills of exchange is prepared is known as drawee. In drawer books, he is asking journal entries. So think from Bhogi Lal's point of view. He prepared a bills of exchange and received acceptance from Narayan Das. For receiving acceptance on bill, we should write the journal entry. If you want to write the journal entry for this, first we should see earlier what happened. Suppose Bhogi Lal sold goods to Narayan Das for 600 on credit. Assume credit period is 3 months. First for this credit sale, we should see what is the entry in Bhogi Lal's books. He sold goods to Narayan Das. So from Bhogi Lal, goods are going to Narayan Das. Two accounts are there. Narayan Das account and goods account. Narayan Das account is a personal account. With the person name, if you open any account, that is personal account now. Goods account. Goods means asset. So with the asset name, if you open any account, that is real account. Goods account is a real account. Personal account rule. Debit the receiver, credit the giver. We are giving goods to Narayan Das. He is a receiver. We should debit Narayan Das account. Real account rule. Debit what comes in, credit what goes out. From us, goods are going, we should credit. Goods word we should not write because goods word comes in 4 circumstances. In case of goods sale, in case of goods purchases, in case of purchase returns of goods, in case of sales returns of goods. If you write only goods word, there is no clarity. For purchases you are writing, for sales you are writing, for purchase returns or for sales returns. So instead of writing goods word, we should write the transaction name. This is sales transaction, no? Sales account. Then final entry is Narayan Das account debtor to sales account. Amount, sales amount 600 and 600. Next what happened? We need a written proof on Narayan Das. So we prepared a bills of exchange for 600 rupees and we received acceptance on that bill. To drawer, this bill becomes bills receivable because in future money is going to come on this bill. From drawer's point of view, same bill is known as bills payable, liability, because he has to pay the money in future. Now we are writing entries in Bhogi Lal's books now. So to Bhogi Lal, to drawer, this is bills receivable. So we received acceptance on Narayan Das on this bill now. So what happened? Debtor asset is converted into bills receivable asset. Then this debtor account we should cancel because now debtor is converted into bills receivable. How we created debtor account? By debiting Narayan's account with the 600, we created debtor asset. If you want to cancel that asset, you have to credit Narayan's account with the same amount, 600 rupees. Then which account is to be debited? A new asset is created now, bills receivable account. So asset shows a debit balance. If you want to create any asset, by debiting that asset, we should create it. Therefore, bills receivable account we should debit. So final entry is bills receivable account debtor to Narayan's account 600 and 600. Why we are crediting Narayan's account? By debiting, we created a debtors account. As debtor asset is converted into bills receivable asset, this debtor asset we have to cancel. So to cancel the debtor account, we credited Narayan's account. Why bills receivable account is debited? We want to create this asset. So asset shows a debit balance. Therefore, by debiting bills receivable account, we created bills receivable asset account. In all four cases, first entry is common. Bills receivable account debtor to Narayan Das account. Bills receivable account debtor to C. Narayan Das account. Narration: being bill accepted by C. Narayan Das. Amount 600. Show the journal entries in the books of accounts of Messrs. Bogilal and Company under each of the following circumstances. A. If they retained the bill till the due date and realized it on maturity. Means till the due date, Bhogilal retained this bill with him. On the maturity date, for example, after 3 months, he went to Narayan Das and Narayan Das paid this 600 rupees to him. That is known as honor of the bill. Nothing but realization of the bill. So for that honor entry he is asking. On the due date, we should write this entry. And accepted by the latter, payable at Canara Bank of India. Means, instead of paying this amount in cash, drawee is depositing that amount in our account, Canara Bank account. Bank balance is increasing. So, bank account is a personal account. Because with organization's names, if you open any account, that is personal account. Personal account rule, debit the receiver, credit the giver. So Narayan Das is depositing money into bank. So bank is a receiver. Therefore, we should debit bank account. He deposited bill amount 600. So debit 600 rupees. Then which account is to be credited? Don't think that Narayan Das is paying money. He is a giver. So we should credit him. No. Because in first entry we debited Narayan Das account. In second entry we credited Narayan Das account. Means Narayan Das account is already closed. Then which account we should credit here? Bills receivable account. Why? Because by writing the second entry, we wrote in the books that we have a bills of exchange with us. On this, we are going to receive 600 rupees. It is an asset. When we receive that 600, now there is no value for this bill, no? So bill will be cancelled. Means this asset we should cancel now. So by debiting we created this asset. If you want to cancel, you should credit. With the 600 we should credit. So if bill is retained with the drawer and honored on the due date, for a honor in drawer books entry is bank account debtor to bills receivable account. Bank account debtor to bills receivable account 600. Narration: being amount received on maturity of the bill. BB. If they got it discounted with their bankers for 580 rupees. Here you should know discounting concept. We allowed 3 months credit period to him now. Suppose before 3 months only we need money and he is not in a position to pay that amount. Then we have an option. We can sell this bill to a bank at discount. This is known as discounting of a bill. Selling the bill to bank before the due date is known as discounting of a bill. Then bank pays that amount to us, bill amount. And on the due date, bank goes to drawee and the bank collects the bill amount. Then what is the benefit to banker? When we discount that bill to bank, bank doesn't pay full amount to us. They deduct some amount towards discount. In this problem, we discounted this bill at 580 rupees. Means bank deducted 20 rupees discount. Bank deposited 580 rupees in our account. Discount 20 rupees. And bills receivable is cancelled. So bank account is a personal account. Personal account rule: debit the receiver, credit the giver. Bank is depositing 580 in our account means our bank balance is increasing. Bank is a receiver. Therefore, we should debit bank account. Bank account debtor 580 rupees. Instead of receiving 600 as a final settlement, we are receiving only 580 rupees. Means we are losing 20 rupees. To us, this is loss known as discount. So discount loss is a nominal account. So expenses, losses, gains and incomes come under nominal accounts now. So nominal account rule: debit all expenses and losses, credit all incomes and gains. Discount is a loss, it should be debited. Discount account debtor amount 20 rupees. Then in second entry we wrote in the books that we have a bills of exchange worth 600 rupees. On this asset 600 is going to come. When we sell this bill to bank, now with us there is no bills of exchange asset. So we should cancel that asset in our books. By debiting we created this asset. If you want to cancel, you should credit. Therefore, we should credit bills receivables account. Amount 600 rupees. Then on the due date what happened? In question is giving that this is honor model. So bill is not dishonored, bill is honored. So in all these four cases, our assumption is on the due date, drawee paid this amount. So on the due date, bank went to drawee, bank presented this bill and he paid money to bank. So transaction is between drawee and bank. So drawer is not affected here. Therefore, on the due date, for a honor of the bill, in drawer books we need not to write any entry. Bank account debtor 580 rupees, discount account debtor 20 rupees, two bills receivable account 600 rupees. Narration: being bill discounted with the banker at a discount of 20 rupees. CB: if they endorsed it over to their creditors, Messrs. Cox and Company, in full settlement of their dues of 650 rupees. To understand this entry, first we should see before to this what happened. Bhogilal is liable to Cox and Company. Why? Suppose he purchased goods from Cox and Company on credit. So purchased goods from Cox and Company, 650 rupees. This is a transaction. Let us think the entry for this. So from Cox and Company, goods are coming. Goods account is one account. Cox and Company account is another account. Goods account is a real account because I said Cox and Company, firm's name no, personal account. Real account rule: debit what comes in, credit what goes out. Goods are coming to us, we should debit. Personal account rule: debit the receiver, credit the giver. Cox and Company is giving goods to us. They are givers. Means we should credit. Goods word we should not write no. Instead of goods word, transaction name we should write. This is purchase transaction. Purchases account. Final entry is purchases account data to Cox and Company account 650. This entry already we wrote. Here Cox and Company account is credited. If any personal account is credited, it gives a meaning that they are creditors to us. So we have to pay 650 to them. This is a liability. Now we have 600 worth bill now. So we want to endorse that bill to Cox and Company in full settlement of that due amount. And they accepted for this. Endorsement means transfer of the bill. When we endorse this bill to them, they are not creditors now. Because in full settlement we are giving this bill. So by crediting, we created a creditor account, a liability. If you want to cancel that, you should debit. Therefore, C entry is Cox and Company account data. Once we credited their account with 650, as we are settling their loan amount, we have to debit with 650 rupees. 2. How much worth the bill we are giving? 600 worth bill. So in second entry, we wrote that we have an asset worth 600 rupees in the form of bills of exchange. When we transfer that bill to them, now with us there is no bills of exchange, means this asset we should cancel. By debiting, we created this asset. If you want to cancel, you should credit. So we should credit bills receivables account with 600 rupees. Then instead of paying 650 rupees, we are giving 600 worth bill to them. Means 50 rupees discount to us. Discount received, gain. Gains come under nominal account. No? Nominal account rule. Debit all expenses and losses, credit all incomes and gains. This is gain to us. Therefore, we should credit to discount account 50 rupees. This is the final entry. On the due date, what happened? Cox and Company went to Narayan Das and they collected bill amount. So transaction is between Cox and Company and Narayan Das. So drawer is not affected here. Therefore, in drawer books, we need not to write the entry on the due date for honor of the bill. So remember, when bill is endorsed and honored on the due date, for this honor in drawer's books, we need not to write any entry. And here, in case of endorsement, you can see two parties. So a person who is endorsing the bill is known as endorser. Bhogilal is endorser. And a person to whom this bill is endorsed is known as endorsee. Cox and Company is endorsee. Cox and Company account data, 2 bills receivable account, 2 discount account. 650 debit, 600 and 50 credit. Narration: being bill endorsed in favor of Messrs. Coke and Company in full settlement of their dues of 650 rupees. Last bit, debit. If they send the bill to bank for collection, we are maintaining bank account now. Bank gives so many agency services to us. Actually speaking, we should go to that particular person, drawee, and we should collect the money. But we are given standing instruction to our banker. On the due date of this bill, bank only should take the responsibility of collecting the amount from drawee. Bank collects the amount and that amount will be deposited in our account. For this service, time to time, bank collects some charges from us. So for sending the bill to bank for collection, first we should write one entry. On the due date, for a honor of the bill, we should write second entry. In debit, we have 2 entries. First entry is for sending the bill to bank for collection. With us, there is one bill, 600 worth of bills of exchange. Now we are sending this bill to bank for collection. So with us now there is no bills receivable. Means this asset we should cancel. Therefore, we should credit bills receivables account. 600 worth of bill we are sending to bank now. Write down 600. And which account is to be debited? Don't think that we are giving bill to bank. Bank is the receiver. So debit the receiver is applicable. We should debit bank account. If you debit bank account, it gives the meaning that bank balance is increasing. When bank balance increases, when we send the bill to bank for collection or on the due date of the bill, on the due date of the bill. Therefore, bank account we should not debit. Bank is not a receiver here because bank is acting only as an agent between drawer and drawee. One should recollect discounting model. In discounting model, on the due date, bank collects money from drawee, that is banker's amount. Here bank is not an agent. Therefore, while writing discounting entry, we debited bank account. But here bank is acting only as an agent. Therefore, we should not debit bank account. But we want to remember that we sent a bill to bank for collection purpose. Therefore, we should debit bill sent for collection account amount 600 rupees. On the due date, what happened? Bank collected that amount from Narayan Das and that amount is deposited in our account. No? So on the due date, our bank balance is increasing. So bank account is a personal account. Personal account will debit the receiver, credit the giver. So on the due date in our account, money is deposited means bank is receiving that money. We should debit bank account. On the due date, second entry we should write. Bank account data 600 rupees to which account is to be credited. Here in first entry, we debited this account because we want to remember that we sent one bill to bank for collection. On this bill, money should come. On the due date, so that bill is realized, money came, then we should cancel this account now. Therefore, we should credit this account. Amount 600 rupees. So remember, there are 4 treatments towards a bill now. After receiving the acceptance from drawee, drawer can retain the bill with him, he can discount the bill, he can endorse the bill, or he can send the bill to bank for collection purpose. Here, in case of discounting and endorsement, if bill is honored on the due date, for that honor in drawer's books, we need not to write entries because in that case, drawer is not affected. But first case, when bill is retained with the drawer, last case, fourth case, when bill is sent to bank for collection. In these 2 cases, on the due date, when bill is honored, in drawer books, we have to write the entries because he is only receiving the amount. In retaining model, he is receiving the amount. In bill sent to bank for collection model, bank is receiving that amount and it is deposited in his account only. Means indirectly he is only affected. Therefore, he should write the entry for honor. Bill sent for collection account data to bills receivables account 600. Narration: being bill sent for collection to the bank. Bank account data to bill sent for collection account 600. Narration: being bill sent for collection to the bank honored on the date of maturity. So this is all about second problem from bills of exchange topic. Hope this video is helpful to you. Thank you.